Hello and welcome to Unleashed, the show that explores how to thrive as an independent professional. I'm your host, Will Bachman, and I'm excited to be here today with Karen Thomas Bland, who is a former executive director at KPMG. She's a former partner at IBM Global Business Services. She's been on 10 or 11 boards of PE-backed companies and an independent consultant who focuses on transformation projects. Karen, welcome to the show.
Thank you, Will. Great to be here.
So Karen, why don't you give us a little bit of a snapshot of kind of your journey? You started not the typical consulting path, right? But you started as, I think, an organizational psychologist.
Yeah, that's right, Will. So yeah, it was a different path, perhaps. So I spent 6 years training to be a organizational psychologist. I was really interested in people and how they behave, particularly in a workplace setting. So my early work was all around change management, around organizational design, development, assessment. So very much people-centric, but tipping into broader organizational issues like how do you bring two cultures together in an M&A. So yeah, I started very much in what you might term boutique consultancies, specializing in kind of the people side of change and organizations, and then kind of worked my way up through those, started obviously delivering projects and then developing those client relationships and projects, and ultimately running businesses. But it was my real broadening out was at KPMG, and KPMG were at an interesting point, as they'd sold their consulting business previously to Atos Origin. And I went in to build out the advisory practice, particularly around strategy and transformation, but not just from a people perspective, right? From a strategy, a process, a technology, and people point of view. So that was really interesting times. We're growing that business back up, really interesting client projects, but also selling big programs. And post doing that, it took me to, it took me out of the UK to go to IBM. I was based out of New York, Dubai and Sao Paulo at IBM, doing 3 different roles. One, actually running a big business. So I ran what we call our top accounts program. So they were big clients, making sure they were well serviced. We were selling multiple solutions into those accounts. We'd obviously bought PwC, so integrating the PwC consulting offering. I ran a big pharmaceutical account for a while, and I also did 10 integrations of software businesses we were rapidly buying at the time, and so all the challenges and fun that go with an integration. And then did a classic turnaround in our Latin America business. So that took me to 2011, and at that point I relocated back to the UK, where I'm from, and decided I would set up my own consulting practice, really doing 2 things. One, business transformation. So, when clients have developed perhaps a new strategy and want that strategy to be implemented. Or I also focus on M&A. So clients who are typically buying something bigger or more transformative than they've bought before, and they want someone to come in and figure out their new operating model and ultimately integrate those 2 businesses. But it typically is part, again, of a transformation of the business. And then alongside running my practice, Seven Transformation, I also take on non-executive director roles. And these are typically roles in private equity-backed businesses who want someone on their board who can grow that business and ultimately help them scale and finally exit. And they're typically businesses who are service orientated. So they might be consulting businesses or typically with a software or SaaS element to them. And it's working on every aspect from, strategy to product to technology to people, and really helping what's that kind of model from startup through to scale up and exit. So they're really interesting as well. So that's been the journey so far.
So that gives us a lot to talk about. let's start with some of these non-executive director roles. It's not an area that we've explored, too many times here on this show, and I'm really interested to learn about it. Maybe just walk us through what that's like in terms of the time commitment, what sort of the expectations are for, how involved are you? Is it you just show up for a few meetings per year, or is it really you're actively engaging with the company over time? Tell us a little bit about, about those roles, and also how they come about. How does the PE firm find you, and how do they start?
Yeah, great questions, Will. I mean, the first one to address off the bat is, I think there is a misperception sometimes out there that, you turn up for a monthly meeting, read the papers in advance, contribute during the meeting, and then sort of rock up at the next month. And that's a misconception, because these organizations have typically just got PE funding. So they're now cash rich, and they know they need to grow and they need to scale. And the private equity firm will have given them pretty challenging targets to meet, right? So the pressure's on. So really the board role is, yes, there's a formal governance, be on the board, read the papers, do good due diligence. There's everything that comes with a typical board role. But beyond that, what you often find is, founders will not have all of the skills that they need. Inevitably, these organizations haven't grown yet to a scale. And so you're needed in all aspects of the business, and that's often shaping strategy with them. So, for example, I will often facilitate, the strategy day for the board and for the executive team. They'll often need help thinking about their operating model, particularly as the business is about to scale. How do you need to think differently about your processes being more formalized and more routinized? What's the talent that you're going to need in terms of capability to really scale up the business? Is your technology roadmap as robust as it could be? When are you likely to need refinancing again, or are you now self-sufficient? And how does that really impact your ability to scale? And often the business I'm working with will be already in maybe one or two other markets, and they may even have acquired a business like one that I've been working with. So they're also thinking about their geographic expansion plans. So how do you get the roles? It tends to come in a number of different ways. So I would always say to people, beyond the radar of headhunters who deal with non-executive roles, and if you're particularly interested in PE-backed, sort of more entrepreneurial businesses, there are specific headhunters who deal with those. Two is get to know private equity houses directly. They inevitably, like everyone in life, likes to work with people they already know and are already on their radar. And an introduction, obviously, always works really, really well. So really get to know them directly, but also network with CEOs of businesses that are being funded by private equity. Because again, I've been in through the CEO route as well as the investor route. So I would say all of those things. In terms of time, there's no one set amount of time, because each month looks pretty different. Some days, some months it can be a couple of days, might be a little bit more intensive if something significant's happening, like a fundraise or like, the strategy offsite. But typically they'll want you to commit to a couple of days a month. I tend to be pretty good at doing things around the edges. So, can keep delivering in my consulting practice and do it around the sides. But there's times I'll just take, specific time off to focus on the board roles. For the plus side, I think they're really interesting. I think the good news for people in this community is having a consulting toolkit is really, really valuable. As I say, they're looking at all aspects of the business and have all particular challenges. So they're definitely interesting. They keep you on your toes. And of course, they're highly receptive because they want to grow and therefore need the expertise.
And how does it differ than, say, doing being a consultant to a company? So a lot of those individual tasks that you talked about, facilitating a strategy offsite, advising on, acquisitions or strategy or upcoming finances, those might be done by someone who's been hired as a strategic advisor, but not on the board. How is it different, either in sort of structure of compensation or expectations, or ability to get things done, or impact? How would you distinguish it?
Yeah, so there's a good analogy that often people talk about, which is if you're a board member, you've got your nose in the tent, but not your hands in the tent. And I would say if you're a consultant, you've very much got your hands in the tent because you're actually working on the business. The difference for the board member is you're one step removed. You're not necessarily rolling up your sleeves. Although that can sometimes change depending on how early stage the business is. But really, it's all down to your advice, your counsel, kind of not being quite as hands-on. The other thing it's always important to note the minute you become a non-exec director is you have legal responsibility in the business. You're no different to a executive director. So you have to take your director responsibilities incredibly seriously. You've got to do good due diligence on the business, make sure it's financially robust. Now, of course, you would do all of those things as a good consultant as well, but there is that bit more kind of responsibility. The remuneration side is interesting. Typically, in my experience, there's a salary for non-exec roles. It's nothing to get too excited about, but where they are open, particularly PE-backed companies, in giving some equity away as well. So you've got skin in the game to make sure that you're committed and focused to growing the business. But there is absolutely a degree of overlap to what the consulting role is, which is why I'm sometimes surprised that not more consultants are actually stepping in and doing the non-exec roles.
Beyond the satisfaction and besides the compensation, is there any kind of reputational benefits or just prestige or relationship of getting to know people that's different being a non-executive director versus being a consultant? Do you think, having been does that help you when you're talking to other clients, the fact that you've been on a board, in your discussions?
Yeah, I definitely think so, Will. I think there's always interest, particularly because actually in my day job where I'm consulting or being a step-in executive, I'm working with the largest businesses. So large, listed corporates, they're always really interested in best practice from private equity. And I think that best practice flows both ways. So I think, yes, there's interest. I don't know about the prestige factor, but it's certainly good from a networking point of view. So I found being a non-exec, I get invited to other networks, the Chairman's Network here in the UK, the Non-Exec Directors Association. So it suddenly gives you a network of people who are on boards, and not just private equity backed board, right, but the listed boards, can be charity boards and others. So I'd say it's really good from a networking perspective, and actually out of those networks I've got consulting work in bigger businesses, right? So I think it's good from that perspective, and I think it's good just to sometimes challenge yourself with the challenge of a smaller, more entrepreneurially minded business with the pressure of private equity. That is quite a tough situation to be in and to grow in line with expectations. And so I think it's a good challenge for yourself to put yourself in that position. What would you do? Take that sort of entrepreneur mindset and figure out what is going to help this business grow. And of course, the corporates are interested in that, because that nimbleness, that agility, that ability to kind of work at pace is often what they're trying to build into their culture. But because of size and scale that they're at, can be quite challenging.
Can you give us any examples, obviously sanitized, of a specific case of an interaction you had as a board director, where you've added value? Like, what was the situation? What was, how did you advise the company? What resulted from it? Again, obviously sanitized.
Yeah, sure. Yeah, I was working with as a non-exec in I'll call it a human capital business. It was part consulting business. It was part software as a service business. They were looking to acquire. They'd identified a US-based business they were looking to acquire, and I really helped them on all elements of that. From what due diligence do you need to undertake? when you buy this business, how is it going to really integrate into your operating model? How does it fit into the broader strategy of what you want to be able to do? Because often these businesses are acquisitive and will look for that kind of M&A experience. So I brought all of that to the table, from doing the culture audit to looking at the financials. This was not a particularly profitable business, but we saw an opportunity on how we could quickly address kind of the low margin issue, and so worked out, in the truest sense of the operating model, how do we make sure we're going to build this to be a profitable business. There was obviously cost takeout opportunities, as we didn't need to duplicate roles, so everything that you would expect in a typical M&A. And so we were successful in making a play for and acquiring that business. Another example in that same business was it had grown to a certain point, which often these businesses do, and they're founded obviously by entrepreneurially minded people, but perhaps who haven't scaled a business. And so there tends to be a point by which they are really looking for advice on how do I scale this business. And so again, I stepped in and run as a first step the strategy day, where we put everything on the table about how we're going to grow this business, where's our North Star of where we need to get to, and what are the steps, and important to go through these in quite some detail, but what are the steps then we need to take to get that business on the journey. And as private equity, we will always be on the board as well. It's important they can see that that's happening and can see their path through to value and ultimately exit.
Let's turn to some of your other work, your more consulting work. You talked about both doing M&A integration as well as operational transformations. Could you walk us through an example of an operational transformation you've been involved with?
Yeah, definitely. So it's funny, they all come in slightly different wrappers, but certainly one was a listed business. It's FTSE 100 here in the UK. It actually presented itself as a restructuring effort. So they'd recognised they wanted to take cost out and had a 10% cost reduction target that they'd sort of identified. And so I went in originally under a restructuring banner to take cost out basically of the business, which involved a huge piece of kind of organization design, following an operating model, and worked out where there were potential kind of opportunities to take out costs, both from a people perspective, but it was looking at everything from, can we look at procurement and can we join things up? I should add that this was a business that had grown up through acquisition, and so different parts of the business were all following different systems and different processes. So there was a big reconciliation opportunity to bring processes together and to streamline systems. And so anyway, I went in and took out that cost. But as part of taking out the cost, they were also on a transformation journey as a business. They were going from what was a legacy business. They'd identified an opportunity and wanted to go after that. And so I positioned then a commercial transformation to them, which was everything from, what new skills and capabilities do we need? What processes are really getting in the way of delivering to our customers, and how do we streamline those? And how do we bring, technology stacks together so that it's streamlined? What's our, kind of operational strategy going forward? Because there was challenges when I looked at the business around, delivery to customer and customer satisfaction, like NPS levels. So there were lots of opportunities. And so I was able to then run and execute that transformation for them to achieve everything from, as I mentioned, the cost takeout, but also margin improvement. There'd been big opportunities to look at that, customer satisfaction through greater net promoter score, and just more efficient in terms of delivery. So that the business was then repositioned for growth. But it was a bit of both. It was a cost takeout with a transformation, but also a bit of integration, as they'd left some companies that they'd bought not being integrated into the whole. And so there was some reconciliation to do around the legacy integrations. But that would be one example, actually, of turning a restructuring effort into a transformation program.
All right. could we go let's go a level deeper on this. So there's restructuring. Walk us through kind of how do you practically get started on that? Like, what does week one look like? What are the questions you're asking, the data you're collecting? Let's kind of get into it, almost into a how-to to go. So what are your activities sort of during that first week, and what would you collect and look at?
Yeah, definitely. So week one, I would definitely describe as data collection. What you really need to know is you need to understand the cost base, of the business. You need to understand kind of the margin. You need to understand how efficient is the business being run. What's the productivity level like? What's the customer experience? So as much as possible, our customers receiving the service, what sort of rating are they giving you? What's your employee kind of scores in terms of retention and so on. So it's basically doing a bit of a health check on the business and saying what's the data kind of really telling you. There's always a kind of hypothesis anywhere that you can, organizations naturally, particularly that have grown through acquisition, haven't necessarily taken out the cost base that they could, and so there's always opportunities for that. So really you're looking at where's the opportunity, and there's also a bit of a, that's the quantitative side, but then there's the qualitative side, which is talking to people about their day-to-day activities and where do they see opportunities for efficiency and improvement, because often the people that are doing the job have insight that hasn't necessarily always filtered up, and there hasn't been a systematic way of capturing that. So there's a qualitative element too, which is asking the people running those businesses, working in those businesses, where they see the opportunity. And so then it's about bringing all that data together and saying, okay, where do we think are the biggest opportunities, as the term low-hanging fruit, or where looks obvious that we can start to take out some cost. And of course you don't want death by 1,000 cuts, and so it's working through that and having a value case where you've got some numbers attached to the different activities that you're going to do, and then it's working out, and this is where the kind of change management element comes in. What's the pace and sequence of that change, bearing in mind, of course, you don't want to destabilize the organization, you don't want to derail delivery to the customer. If you are needing to make redundancies, you want to do that in a fair process, and you also want to do it in one hit. Ideally, you don't want to draw that out as a long process, and so you take all of that into account when then working out what's your transformation plan or cost takeout plan to achieve that.
Yeah, for this business, this example, can you walk us through some of the specific cost savings opportunities that you found, in terms of, was it people doing the same function across multiple acquisitions they had done? Like what sort of functions were there? How did you manage to, save cost? Like give us some practical, detailed examples.
Yeah, sure. So cost takeout. So there was a big one around people duplication of activity. As this business had grown through acquisition, what it hadn't done is ever really integrate those businesses. They were left pretty much standalone. So from like a back office functional perspective, like people, like procurement, finance, there was an opportunity in those enabling functions to immediately start to bring roles together. So that was one big one. It's probably fair to say in this example, they hadn't necessarily looked at the contracts they had with suppliers. So there was a whole piece of just looking at what contracts could be renegotiated, and that, believe it or not, gave quite a big number. And it often happens, right, as organizations don't necessarily always keep a strong tab on, where all the spend is going. The other area was definitely around, just looking at what activities people were doing, because again, often people were doing things that actually could have been done through through technology. So it was again saying, if we get the right technology in place, a bit like, take the sales funnel, how can we just streamline that so we don't need to make it as manual? So that would be another example. And then when we looked at the processes, it was a case of saying, some of them were too cumbersome. They hadn't really been streamlined. They weren't designed with the end customer in mind. So that was another opportunity. And then the other thing we looked at was the data. So again, a lot of manual turning on the data. And so again, putting in place systems which would have a much better data analyst capability. And then also just created some centers of excellence. So for capabilities that could just be shared across the businesses, data analytics is a good one. Didn't need that to be replicated 10 times. So where could we create those kind of efficiency opportunities? And then the other one, Will, I find is often it's a bit of a mindset change for leaders in those businesses, and getting them thinking around, what could I do to be more creative around taking out costs, but also then being able to invest for growth. So it's often a bit of a behavioral shift around a different mindset that you need to put in place, particularly for businesses which have come from different places and maybe haven't had that kind of discipline in place.
Let's go into one of those. Like, let's take, say, finance, for example. One thing that I'm curious about is, presumably, let's say there's two companies have been acquired, and there's probably an accounts payable person in both of them. But it's not like those people are just goofing off half the day, right? They're just not sending out invoices in the morning and then just sort of taking the afternoon to play Tetris or Wordle or something, right? So when you're looking at potentially combining those functions and being able to save the cost of one person, what is it that you would do in the finance function in particular, for example, to allow one person to do the work of two people? So, how do you get that cost savings?
Yeah, it's a great question, Will. And often it's about technology as well, right? You're right. Often when I'm doing M&A and bringing organizations together, we'll be looking at the whole and saying, yeah, what does this finance function look like? How many people are in it? What are all those people doing? And likewise on the other side, and then somehow working through a process that gets you the best solution, right? I.e. keeping the best person for the job, irrespective of where they might sit. The other thing I find is it's often about technology and process as well. It's about looking at, is this running efficiently? I don't find, what you said as the example, absolutely. It's not that people haven't, been working at full capacity. It's often about, they maybe haven't worked sufficiently. Like, have you mapped all your finance processes? Have you worked out which technology can help you and streamline things? That's normally where you start to get the synergies or the efficiencies. It's not just about adding in more people, but there is often the point that some organizations as they grow, they've just not been as stringent on saying, can I take 10% cost out of this business? That thinking hasn't always happened. I was doing a deal recently where the company the company I'm working for is buying just doesn't have great margins. They're low, and it's because they just haven't taken that rigorous look at the business and sort of thought through all their processes. There's been some really obvious wins in procurement. They've just not gone in and negotiated hard on some of the deals. So it's funny, but you immediately then start to be able to add up and count up your synergies, but it's not always a people solution. It can be a process, it can be a technology, and it depends really.
Got it. Okay, let's walk through an example from your more M&A integration side, which I mean, this was slightly related to that, but can you give us another example of an M&A integration you've helped support? I mean, you mentioned you did 10 of them while you were at IBM, and I know you do a lot of them as running your own practice.
Yeah, definitely. I'm happy to. So one of the integrations that I'm working on at the moment, it's a company, listed business here in the UK, buying a listed business in the US. and buying something bigger than its own size. So it's buying something twice as large as it is, and thinking through. So I'm thinking through with them two things. One, what's your immediate cost out? As I mentioned, there's been opportunities from a procurement perspective, from a people perspective, and so on. There's a piece then which is around the transformation of these businesses. So again, it depends how you play it, but in this one, it's going to be transformation first and integration second, and I've done it the other way around. But it does make sense in this instance to look at both businesses and saying, you know, what do we see as the upside opportunities? So this is looking at everything from go-to-market in terms of efficiency of sales and servicing customers, looking at the delivery opportunities. And this business is also moving in its area further up the value chain. So whereas its buyer in the past has been the chief talent officer or the human resource officer, moving up that value chain. So it's more of a CEO sale. And there's a lot that goes into obviously that in terms of positioning the solution and so on. So that's been a really interesting one. And then the final part is once those businesses have independently been transformed, it's working through then the operating model of how do we bring those two businesses together, given we've now got a different geographic footprint, we've got different products and services to sell, we've got a bunch of accounts that obviously need servicing. So it's working through what does that future operating model look like, and particularly as this company is acquisitive and continues to be acquisitive, we know other acquisitions will come down the pipe as well. So what does that full operating model look like? So no small challenge.
Okay. Tell me about what you bring into kind of a post-merger integration situation in terms of content. Do you have sort of playbooks that you work with and checklists and so forth that you've built up over time, or how do you typically approach that?
Yeah, Will, I do. So over time, I've built exactly those. So, you know, I will have what does the integration team and office, you know, actually look like? What are the roles of responsibilities? What's the plan? You know, I would always have a day one plus 90, etc. plan in place. So yeah, I've built methodologies. Now, it's not to say slavishly, you know, following those and not doing everything else, because every client, you know, situation is completely different. Like this one's focused on, you know, transformation before going anywhere near an integration. So everyone is different. But yeah, over time, I've built some key methodologies that really help sort of accelerate and get things done quicker than if you're starting from a blank piece of paper. So I bring that. Obviously, you know, as I always say to clients, they can go to a, you know, McKinsey, Bain, BCG, or they can go to the Big Four, or indeed others. There's many ways and places that you can go for post-merger integration support, but sometimes they're open to saying, yes, I'll work with as many of your listeners will know, I'm open to working with an independent practitioner. And my typical model is to bring people around me. So it's obviously not just me, it's bringing in, you know, a PMO lead and a finance lead, maybe someone who will track on the benefits realization case, maybe it's a procurement expert. So I'll bring that kind of team around me. So in a way, we're modeling what a consulting team would look like, but of course we don't have the brand. So, you know, the client can't say McKinsey, Bain, EY, PwC said. They don't get that, but they do get people who've been there, done it, and got the scars from, you know, integrations.
Right. It makes total sense. And you also, I think, published some thought leadership as well. Tell me a little bit about that.
Yeah, so I probably was a bit too late to the game on this, if I'm honest. So when I started my practice in 2011, I did not write thought leadership, and so I just concentrated on clients, building the business, getting clients through the door, and really proving that out. And then it was around kind of the back end of about 2019, and probably good timing into the pandemic, where I really thought, you know, I want to invest more time in thought leadership. And actually I joined a community of people who all were on that journey as well, which is often a good from a support perspective. And so, yeah, I write now pretty prolifically in terms of just getting into, you know, CEO Today, Management Today, Financial Times. I'll target, you know, relatively high profile publications and write about M&A, write about transformation, and write about general leadership and kind of board issues. It's been great. You know, I would highly recommend it to anyone in, you know, who's building their practice. I wish I'd done it sooner. I've found great, you know, connections come out of it. I've had 2 client leads directly come out of pieces that I've written, which is obviously fantastic. And also there's a bit of a community of people who do regularly write. And so there's lots of people to spar ideas of and, you know, bounce things around. So there's a bit of a community of people who want to be recognized as, you know, thought leaders. And so, yeah, I've really enjoyed the journey. I've learned a lot. I've got much better at writing because it's a different skill from writing in consultancy. So I've really enjoyed that element.
And those are high profile publications. How do you get your material published there? Did you get to know people there over time, or get introduced to someone, or just approach them cold? How did that work?
Yeah, so I've done a couple of things. I started on my own. So I started, and you need to write a pitch, right? So the typical way to get into any magazine, paper, whether it's the New York Times, whether it's Management Today or whatever it is just to write an article that they're really interested in, but just give them a snapshot. So just write an interesting pitch, almost tell them what you're going to write. So don't write it. And then they come back to you and say, actually, that's really interesting. I found reading their articles, what they publish, to be obviously invaluable, because you can kind of see that the content that they like. But I actually did then hire a PR firm, and I did that because, you know, if I look at where my time's best spent, it's obviously with clients, but I also keep the writing of the content, but I use a PR firm to make those kind of introductions to journalists they get inbound inquiries that they can respond to. So I've found having like that PR support to be really helpful. But by the way, if you're listening, you can do this on your own. You just have to write out with interesting ideas and pitches for articles, and you know, you get traction. And so it works. And it's great. It's really enjoyable as well.
Yeah. And so just I'll point listeners, and we'll include this link in the show notes to your website, 7transformation.com. You've got just recent articles, how to embed ESG into your M&A deal, how do you deliver the cost and growth synergies, where can CEOs and boards play a bigger role in the M&A deals. And these are, you know, to your, as you mentioned before, in really high profile publications. So that is really amazing. And I'll just say, listeners, you should definitely check out Karen's website. It's just beautifully done. I'd say really a best practice website. Just looks beautiful. You land on the landing page, Y7, and you know, just beautiful images. How did you get this website put together? It's just a beautiful job.
Yeah, thank you, Will. It was one of my 2020 projects. So I recognised I needed a better website. Actually, a friend of mine, ex-PwC partner who's recently gone portfolio as well, had a great website designer. So it inspired me actually to get mine done. So yeah, I hired someone who come in, and, you know, I spent a lot of time thinking about the value proposition, thinking about, you know, I was going to showcase thought leadership, how I was going to sort of give a methodology and what it's like to work with me in testimonial. So it was a really good exercise to go through. It's also sharpened my pitch with my clients as well, because it really gets you to think about, you know, what's the essence of what you do and why is it differentiated, and so you end up with a crisp value proposition. But yeah, invested quite a lot of time in the website last year, partly because I want to scale my business, and ultimately having that kind of professional image is important. But no, it was a really enjoyable process to go through, and I've had lots of positive client commentary about it, so it's been a good engagement tool as well.
Yeah, I will. Well, like I said, we'll include that link in the show notes, and definitely check this out. It's really one of the best websites I've seen of an independent consultant or boutique firm. Karen, beyond your website, any other links or ways that people can find you and reach out?
Yes, of course. Yes, a website is one way. I'm on LinkedIn at Karen Thomas Bland. I'm the only one in the world on LinkedIn. So yeah, always happy to connect. Love to connect with others doing something similar. I find, the power of the community to be brilliant, given what we're doing. You can also find me on Twitter, Karen THB. You can find me there as well. On other platforms like Instagram, I'm merely a lurker. So probably way.
Fantastic. All right. Well, Karen, it's been great speaking with you. Thanks for coming on the show. And listeners, if you want to follow up, check out our website. Links in the show notes.
Fantastic. Thank you, Will. Great to speak.